Good morning, everybody. It's Wednesday, November 27th, 5:27 a.m. Central Time. Grain markets are mixed this morning. March corn futures up a quarter cent at 428 and a quarter. January soybeans up 5 and a quarter at 988 and 3/4. March Chicago wheat down 5 and a quarter at 552 and 3/4. March Kansas City wheat down 4 and a quarter at 554 and a half. March spring wheat down 3 and a quarter at 598 and a quarter. A few housekeeping notes before we get started. The markets are closed tomorrow for Thanksgiving, so we're going to be off tomorrow. We're also taking Friday off. I know the markets will be open, but we're taking a day off Friday. I think you guys will survive without us. A couple of things that we would request from you guys. We'd appreciate it. If you guys are watching on YouTube and you're not subscribed, subscribe to the channel. We're closing in on 18,000 subscribers. I think we can do that before the end of the year for sure. And I never ask you guys to do this anymore, but if you're listening on the Apple Podcast app, leave us a review, even if it's just 1 or 2 words. If you love the podcast, leave us a review. If you hate it, leave us a review. But we haven't had any reviews in a while because I haven't asked in a while. So would appreciate that. All right, enough of the nonsense. Let's jump into our first story here.
So Mexico's president may impose retaliatory tariffs on the U.S. if President-elect Trump proceeds with his day one tariff agenda. Early this week, Trump threatened to impose 25% tariffs on all goods imported from Mexico. Trump will demand that Mexico stop the flow of both illegal migrants and drugs into the U.S. President Claudia Scheinbaum said on Tuesday one tariff would be followed by another in response, and so on until we put at risk common businesses. She said that Mexico has done a great deal to stop the flow of migrant caravans to the U.S. border, although Mexico's efforts to fight the flow of illegal drugs have failed in the last year. Mexico has been the top buyer of U.S. corn this year.
And that is why this is of extreme interest to us. Mexico accounts for 41% of all U.S. corn export commitments. And there is some concern, I believe, regarding what they'll do when they retaliate, if they retaliate. Could corn be involved? I don't know. I think this is probably part of the reason the corn market sold off yesterday. We only lost 5 cents in March corn futures, but in a very low volatility environment like we're in right now, 5 cents is a fairly substantial move. The other thing that may have played a role in yesterday's price weakness is first notice day. December 1st notice day is Friday, and we're off Thursday. So any basis contract that a farmer's holding for December corn is going to have to be priced or rolled by close of business today. But the vast majority of them have probably already been priced or rolled. There'll be a few last minute ones that get done today. So that is something that oftentimes results in some price weakness. We've stabilized a little bit here this morning. So this is a wait and see deal. She says, yeah, we're going to retaliate. Didn't really list any items. I know a few of you guys have asked about this Mexico ban on GMO corn. And the specifics to that is that Mexico wants to ban GMO corn, but only for human consumption. And the vast majority, 90-something% of what the U.S. sends to Mexico is GMO corn for animal feed. It's not for human consumption. So that's not really an issue for the corn market in general, just an FYI.
China is ramping up its purchases of Brazilian soybeans. The increase in buying comes as China takes advantage of lower prices and secures supply before Trump returns to the White House. Ongoing purchases of Brazilian soybeans have allowed China to secure over half of its soybean needs for February to April and about 20% of its needs for May to June. Chinese buyers have purchased Brazilian soybeans for December and January delivery, despite higher prices during that time. Typically, the U.S. dominates the global market during those months. China is still purchasing U.S. soybeans. However, outstanding soybean sales for the current marketing year are the lowest since 2018.
Bloomberg had this chart, which I believe is U.S. versus Brazil cash prices for the month of February, for like February delivery. And Brazil's cheaper by a little bit, as they almost always are during that time of year. A lot of this will come down to just how big the Brazilian soybean crop is. As of right now, the weather looks really good. There's not really much of a weather threat to speak of. The potential for that record crop remains very much intact. So I don't know. I don't see anything that's like odd or out of place here. I mean, maybe they're buying a few extra Brazilian soybeans because of the tariff threat. But I think the bigger issue than Trump is just the global supply demand situation, burdensome stocks, monster crops in Brazil, that sort of thing. I think the Trump tariff thing is probably secondary to that. Oh, somebody asked me to make this chart. Joe, can you do a historical chart of soybean exports, Brazil and the United States? Brazilian soybean exports have increased 270% since 2010, and U.S. soybean exports during that same time frame are like flat to just slightly higher. And this is part of the problem, that Brazil has just become such a monster over the last 15 years, where the U.S. has just kind of flatlined. We are processing more here in the United States. We're crushing a lot more, but the exports have suffered as a result of Brazil largely.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our premium videos this week?
So the last story is a good segue to this video. The new soybean seasonal tendencies in the soybean market have changed drastically over the last 5 years, especially. And I did a video about that on Monday. What's the new soybean seasonal? How does it apply to your grain marketing? I think this is a must-watch deal if you guys are sitting on 24 beans, if you're thinking about 2025, especially over the next 6 weeks or so. I did an ag lender survey result video yesterday. My friend Nick, who's an ag banker in South Dakota, joined me. Farmer Mac had this survey out following the ag lenders conference in Milwaukee a couple weeks ago, and it was super interesting. It was a survey of ag lenders, and we made the survey available, which that's public info, but we discussed it and added some context, kind of the big concerns that bankers have on their minds right now. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. You'll just get our emails twice a day. There's one at 5 a.m., one at 10 a.m., and that's it. You can jump on the text message if you want. You'll never hear from us other than that if you don't want to. We really just want to sell you a subscription. There's no upsell. There's no hidden fees, nothing like that. It takes about 30 seconds to sign up. Apple Pay, Google Pay, Cash App, credit card. You can do it on your phone. Everything is super easily read and accessible on your phone. There's no messy PDFs to open. There's no login instructions. Really, really easy to do. Check that deal out this morning, guys.
Donald Trump's threats to impose additional tariffs boosted the dollar on Tuesday. The Bloomberg Dollar Spot Index increased as much as 0.7% before closing with a 0.2% gain. Experts believe that the dollar will continue to climb and may exceed its record highs from the 1980s. After the tariffs were announced earlier this week, the Canadian dollar fell to its weakest level against the dollar since April 2020. The peso declined by more than 2%, and the yuan fell as much as 0.4%. Trump's tariff threats are also expected to add volatility and uncertainty to the markets in the near term.
The dollar index has definitely rallied since the idea that when people started to believe Trump was going to be elected again, the dollar rallied, and then it rallied further upon the election confirmation. It was kind of a false breakout above those 2023 highs last week, but you're still within an earshot of those highs. So it's acted very well. To check in on the Bloomberg Commodity Index, it's just been very sideways to sloppy. There's not much of a trend here. There are some aspects of the commodity sector that have been strong. Livestock's been strong, cattle in particular, softs. We talked about the New York markets yesterday, your coffee and cocoa and orange juice. Those markets have been very strong. But those two things combined, the softs and livestock, that's only 12% of the index. Energies and grains account for 53% of the index combined, and those items have been fairly weak. So the commodity markets as a whole, well, you've got a few things that are strong. A lot of things are just weak to sideways-ish.
A ceasefire deal has been reached between Israel and Lebanon's Hezbollah terrorist group. The deal was brokered by the U.S. and France and went into effect early this morning. The fighting between the two sides began way back in October 2023 when Israel launched a military campaign in the Gaza Strip after a terror attack by Hamas. Israeli Prime Minister Benjamin Netanyahu supports the ceasefire as it will allow Israel to focus on the threat of Iran. Israel will continue to work toward eliminating Hamas, securing the safe return of hostages, and returning its people to the northern regions of the country. According to President Biden, the U.S., France, and other nations will provide any assistance to make sure the ceasefire is implemented.
Crude oil prices weakened on Monday when this news was rumored, and then softened up a little bit again yesterday. Crude has been very just kind of sloppy and sideways, kind of a consolidation pattern, really for the majority of the year. You've got a lot of support in the mid 60s in the WTI crude market. We're closer to 70 this morning, but you drop below that 65 level on a continuation basis, and it would look very bad. And that would not necessarily be a good thing for the commodity complex in general and just general attitudes toward the commodity sector.
U.S. consumer confidence has risen to its highest level since July 2023. The Conference Board's latest index reading was 111.7 for November, an increase of 2.1 points from October. The increase was attributed to a more favorable outlook for the economy and labor market following Donald Trump's election victory. A measure of current conditions reached its highest level in 8 months, while the outlook for the next 6 months hit its highest point in nearly 3 years. Fewer than 64 respondents, the lowest since July 2022, believe a U.S. recession is somewhat or very likely in the next year.
So consumer confidence is toward the upper end of the range that it's been in over the last 3 years. The range from 2022 through this year, it's toward the upper end of that. I think the lower part of this chart is almost more interesting. Share expecting greater job availability in the next 6 months, and that number has spiked from it was almost 10 or 12% up to 22%. So it's still a small percentage. People are slightly more optimistic. A lot of the optimism has to do, I think, with the stock market. I mean, people are looking at their 401ks and they just feel richer. You feel like you've got more money when things like that have a bigger balance, even though it's not necessarily something that's accessible right now. You feel a little bit better about your personal situation. What did cattle do yesterday?
Cattle futures were mostly higher. Live cattle were 10 cents lower to 20 cents higher. Feeders had another impressive day, gaining anywhere from 87 cents to $2.62. Box beef was higher on Tuesday. Choice ended the day at $311.57. That was up 186, and Select ended the day at $275.49. That was up $1.75.
Outside markets moving this morning. U.S. dollar is, I'd call it sharply lower. Stocks are off just a little bit. The S&P's down 10. The Dow's down 20. Bonds are up. Gold's up $28. Silver is up as well. Crude oil is up 39 cents in the January WTI at 69.15. Again, we're taking a couple days off, so everyone have a happy Thanksgiving. We'll be back on Monday.